Once you've started your business, there are several things to consider before you even file your very first tax return. Let's talk about year-end elections. Most partnerships and S corporations end their year based on the calendar year end of December 31st. Although these types of pass-through entities can elect a different fiscal year end, there are various limitations and requirements that the government imposes when making a non-calendar year-end election. However, for C corporations, the choice is much more liberal, and they are free to choose really any year end they prefer. Another choice you must consider when starting your business is the method of accounting you will use. You can choose the accrual method or the cash method. And just to review, under the accrual method, revenue is recognized when it's earned, and expenses are recognized when they're incurred. Conversely, under the cash method, revenue is recognized when the cash is actually received, and the expenses are recognized when they're paid. Keep in mind, you can have inventory under the cash method of accounting. The government does allow some hybrid methods of accounting if it clearly reflects your income and it is used consistently, which is key no matter what method you choose. Consistency is key. The cash basis method is mostly used by service companies, but you really have to look at the timing of your revenue collections when you're making this decision. For instance, think about a convenience store that deals mostly with cash revenue. A business like that would most likely opt to use the accrual method because the revenue would be very similar under the cash method or the accrual method. But using the accrual method would give them the opportunity of accruing expenses that had been incurred. Similarly, businesses that collect a lot of cash up front before it is earned would opt for the accrual method. The cash method provides more flexibility in planning, though, as you can accelerate the timing of certain expense payments. So for planning purposes, if the cash basis method is feasible, it really can be a great planning tool. One thing to note, though, C corporations or any partnership that has a C corporation as a partner can only use the cash basis method under certain circumstances. Under the Tax Cuts and Jobs Act, they are precluded from using the cash basis method once their average annual gross receipts over a 3-year period reach $26 million or greater. Then they must convert to the accrual basis of accounting, and that threshold is adjusted for inflation. In addition to those items, there are certain administrative tasks to bear in mind, such as you want to make sure you have your employer identification number, even for a sole proprietorship. Although a sole proprietorship has the flexibility of using the owner's social security number, I don't think most people would really want to do that, so it's important to apply for an EIN. Another checklist item when you choose S corporation status, it's not as simple as just checking a box. A separate S corporation election must be completed timely once the corporation has been formed. And although most states do recognize the federal S election, certain states have separate state S election forms, so you might need to elect S status in the states that you're doing business in as well. And that reminds me of state registrations. You need to register to do business in your resident state, and if you're doing business in any outlying state and you want to have legal standing in their courts, you want to make sure that you're registered in those states as well. Lastly, if your business has established nexus in a state, sales tax comes into play. You are required to register as a retailer before collecting and remitting sales tax. Even if you sell goods for resale or are not subject to tax, registering and filing sales tax returns is expected if you have nexus with that state. And each state has different criteria for what establishes nexus.